How is everybody this morning? This is a newer format for us, so I can't really see you that well with the lights, but thank you for coming. And welcome to the latest in Tax Analysts series of discussions on key issues in tax policy and tax administration. Today's topic is the federal income tax, which is celebrating its 100th birthday this year. I think actually this month, Joe, right?
Yes, next Monday.
Next Monday. Today we will discuss whether the income tax can and should retain its role as a prime federal revenue source. I'm Chris Bergin, the president of Tax Analysts, which is the nonprofit publisher of Tax Notes Today, State Tax Notes International, and many other fine print and online products on federal, state, and international taxation. We are in our 10th year of public discussions on tax policy. If you are new to our discussions, let me say it's great to have you here. Let me just take a moment to explain our process today. I will open things up with some remarks to introduce our topic. I will then introduce our panel of distinguished speakers. Each of them will address aspects of our topic. After that, we will open up the discussion to all of you, and we encourage all of you to participate. We are streaming live video of this event on our website. That explains the presence of the camera. So I want to welcome our virtual audience as well. Next week, we will post both the webcast and a transcript of today's event on our site, taxanalysts.com. For all media purposes, we are on the record. For that reason, when I recognize you, please tell us who you are. Once I call on you, we will quickly get you one of our handheld mics. We are also tweeting this event at #IncomeTax@100 as we reach more people beyond this room through social media. We invite our listeners to send questions via Twitter. Just tweet #IncomeTax@100 with no spaces in between the words and the number 100 written numerically. For technical dinosaurs like me, that's #IncomeTax@100. We hope to hear from you. I will moderate the discussion and we will end at 11. By the way, for those of you in the room, I'm sure the rich discussion of the next 2 hours is enough to keep you with us until 11. But today, we have added one more rich inducement. To celebrate the 100th birthday of the income tax, as only tax analysts can, we will be rolling in a big cake shortly before 11. And we invite everyone to dig in as soon as we wrap things up. For those of you in the virtual audience, we haven't yet figured out how to get cake to you, but we're working on it. Now on to the subject at hand, the federal income tax. As the moderator of our conferences, I try to remain studiously neutral about whatever the topic of the day happens to be. But in the spirit of full disclosure, which Tax Analysts is all about, I will lay my cards on the table for this one. I like the income tax. I've liked it ever since my days in law school. I like talking about it. I like writing about it. I like reading about it. I like coming to conferences about it. I think the Form 1040 is a thing of beauty. Please feel free to think I'm a little weird. Income taxes have at least two characteristics that I find compelling. They can be progressive and they can be transparent. Over the years, I've also had an abiding faith that if the income tax went off the rails, so to speak, if it became less progressive or transparent, if it grew too complicated, if it was altered too much to help special interests instead of public interests, policymakers could fix it. There's an explanation for my faith. After all, I was a young tax professional when I read Treasury 1, the 1984 report that played such a large role in laying the groundwork for our last major tax reform, the Tax Reform Act of 1986, which I covered and wrote about. Despite my perhaps naive belief in the income tax, I'm beginning to wonder whether it's time to retire it. For the first time, as I watch our income tax become less progressive and transparent, I'm beginning to worry that policymakers simply can't fix it. Can you call an income tax progressive when nearly half of the people who earn income don't pay any income tax on their earnings? Under a progressive system, those who make more pay tax at a higher rate. I personally think that's fair. But shouldn't everyone pay at least something as an obligation of citizenship in a free society? Further, can you call a tax transparent when virtually nobody can figure it out anymore? In her recent report, the nation's taxpayer advocate wrote, and I quote, "It takes U.S. taxpayers, both individuals and businesses, more than 6.1 billion hours to complete filings required by a tax code that contains almost 4 million words and that on average has more than one new provision added to it daily. To further illustrate the complexity, there's some disagreement on exactly how many words are in the income tax code. Can you call an income tax system fair when it's riddled with credits, deductions, and other preferences that favor some groups over others? Our income tax is now a bewildering maze of winners and losers. We all know that isn't fair, and that's not good for a system that relies largely on self-assessment. So where are the leaders who will fix all this? Where's our modern-day Ronald Reagan? Who's the next Bill Bradley? We not only lack leaders, we lack a basic consensus about what we mean by the term tax reform. Liberals think it means soaking the rich to get more money, while conservatives think it means cutting rates, especially for the rich, and broadening the base in a revenue-neutral way. Now, forgive me if I sound a little cynical, but I do wonder if the income tax no longer works in this, its 100th anniversary year. Maybe it's time to try something else. To examine all this from multiple sides, we have an absolutely terrific panel. I will introduce them in the order in which they will speak. Joe Thorndike is director of the Tax History Project and contributing editor to Tax Analysts. Jared Bernstein is a senior fellow at the Center on Budget and Policy Priorities. Bob Goulder is the editor-in-chief of International Publications for Tax Analysts. And Michael Gratz is a professor of tax law at Columbia Law School. I'm going to have Joe start us off, but first I'd like to remind everybody that here's Joe's new book. Now, it's not printed by Tax Analysts, so this is not shameless. His new book is entitled Their Fair Share, Taxing the Rich in the Age of FDR. I recommend it highly. Joe, you want to get us started?
All right, well, I'm very glad to see that we have a decent turnout for a tax history panel. That's never a given. I got asked recently by an interviewer what it's like to be a tax historian when you show up at a dinner party. And I told him it was really the worst of both worlds, because it's like that awful class you had in high school mixed with April 15th, and it just turns people off constantly. But this is really, truly a once-in-a-lifetime anniversary, at least for those small little group of tax historians that I'm a part of. 2013 brings what I like to call a landmark in the history of civic tedium. For a century now, Americans have been wrestling with the income tax, and they've been complaining about it for the entire time. And I think the real question is, are we nearing the end of the line? Complaints about the tax are really as old as the levy itself. From the start, people called it complex. There's a guy who says, it's so complicated that it's utterly impossible to understand its meaning, save by consulting a palmist. And that was just 2 years after the tax was enacted. The Americans have called the tax intrusive and unfair and even un-American. But all that complaining hasn't really done anything to slow the development of the tax. And just ask the critics who've tried to replace it, which is, that there have been efforts to do that since the 1920s. Lots of ideas, none of them have really gone anywhere. I think that the question, why did the income tax survive all this if everyone dislikes it so much? There are two reasons, really. The tax does two things really quite well. First, it does what a tax really has to do well. It raises money, and it always has. From the very start, it raised money efficiently and quickly and in large quantities. And that's an important thing for a tax. Without it, it's really just not that useful. The second thing it does is that it comports with popular notions of what is fair. Now, we can argue about that all day long, and in fact, we should argue about that all day long in a democracy. But if you take votes in Congress, the votes of elected representatives, and after the 1930s, if you take polling data seriously, the income tax comes across pretty well and is regarded as irritating but largely fair. Where does the tax come from? How does it show up in the first place? Well, the answer really, the real answer is that it arises out of the failure of an older tax. The income tax movement really starts at the state level. I know that you state people here will like that and probably maybe find it surprising, but it comes out of the failure of the general property tax, which is a tax that, today we think of the property tax as something on real estate and maybe on cars. It used to be on everything. As the financial world got more complicated, it became harder and harder to tax all forms of property because a lot of it was invisible. So the property tax stopped working so well. And when a tax sort of wears out like that, when the world passes it by, something new arises. And the income tax is what came up in response to that. The original income tax was meager, with a top rate of just 7% and an exemption of what would be $70,000 or $100,000 in today's money. It was a light tax applied to just a handful of people. It was designed to make the tax system fairer, but not raise a lot of money. Just 5 years later, it was a very different tax. By 1918, the top rate was 77%, 11 times higher in 5 years. Obviously, that was a result of World War I and the amazing revenue needs. But it does tell us something about the tax, which is that when pushed to the wall, this is where lawmakers looked for money. It took another war to make the tax a mass tax, as they say. During World War II, lawmakers transformed the income tax. In just 6 years, the number of households filing returns increased tenfold. As one scholar later put it, the tax had changed its mourning coat for overalls. That transformation was important for two reasons. For one thing, it made the income tax the most important single source of federal revenue. It might have been that almost already, even during the 1930s. But it was really during the 40s when this tax rocketed to the top of the tax structure and became the one that we relied on the most. From that point forward, it never lost that position. The new tax also changed the way Americans related to their government. So for the first time, the federal government really had a tax collector that was coming into the lives of ordinary citizens and asking them for things. That was something new, and in many ways, Americans didn't have much connection with the federal government at all. The tax collector was their first real experience with the hand of the federal government in their lives. After World War II, Americans across the income spectrum wanted the tax to go down, but those large taxes of the 1940s, they stuck around for a long time. The highest rate, the top rate peaked at 94%. That's sort of a marquee number for the income tax in 1943. But what's surprising is that those 90-plus rates stayed on the books all the way through the 1950s, all the way through Dwight Eisenhower's presidency, even when he had a Republican Congress to work with. I think that the explanation for that is that the 1950s also brought loopholes into our lives in a way that they never had been before. Now, they were a part of the income tax from the start, but the lawmakers managed to hold on to these high rates because they carved up the base in such a way to lower effective rates. So nowadays, we look back on the 50s, and people on the left like to look at the 50s and say, hey, look, rates were really high, and the economy did just fine, so there's no problem with high rates. And there is some truth to that. But there's also some obfuscation in that, because in fact, those rates were sort of notionally high, but the effective rate was paid, even by people who were very wealthy, was much, much lower, thanks to things like the capital gains preference and new liberal forms of depreciation. That was sort of an unholy compromise, and it took John Kennedy, it took a Democrat, actually, to lower the tax rates from where the Democrats had put them in the 1940s. The Vietnam War brought another tax increase, but by the 1970s, disillusionment with the income tax, and especially with the sense that some people were getting away with murder and avoiding their fair share, to use a phrase that I obviously like, it set the stage for real and lasting tax reform. So, I mean, I'm going to leave to other people here to tell the modern history of the income tax, because in '86, you know, we come in and this tax is creaky and reaching what might be approaching the end of its life, and Reagan and the other tax reformers of '86 managed to breathe new life into this tax regime to sort of rescue the income tax from its own creeping failures. The story since then is not a particularly encouraging one. All those things get undone. But that's what happens in a democracy, is that lawmakers naturally undo all the good tax policy that economists and tax lawyers can come up with. And I think the question is, are we reaching that point again, where the tax is creaky, where it's losing popular support, where things like loopholes and, on the other, whatever the, disagreements over the rate structure, have these reached the point where the income tax is in danger again? And for my money, I see it going on. I don't think it's going to stop working quite yet, because it usually takes some sort of external threat or major failure to push an old tax out and bring a new tax in. So the general property tax failed in the late 19th century. It stopped doing what it was supposed to do. It stopped seeming fair to most people. I don't think the income tax is quite at that point yet. We don't have the crisis. We don't have the failure. Now, parts of the tax might be reaching that. The corporate income tax might be reaching that point, where it can't keep up with the modern world very well. But I don't think that the individual income tax is in much danger of that over the short term. What seems more likely to me is that the income tax may have to share the stage fairly soon. It may not do quite the whole job that it used to be able to do. So some sort of new tax will come in. And in fact, that's the way these things usually work. They didn't throw out the property tax when they introduced the income tax in the States. They began a transition, and the transition eventually sort of runs along with itself. I think that's the kind of moment that we're at now.
Thank you, Joe. Jared?